Joining us live on Street View at Lunch is investment advisor Gul Tekchandani. Afternoon, Gul. Thanks for joining us on the show. First up, we've really been trading in this range now for a while. 5100 to 5500. What is it that you think will, what is it that it's going to take to break this range on the upside?
I think the way oil is coming off, and I think if RBI cuts the rates on its meeting in April 15th, I think, or the 17th, then I think this market is going to move out of the range. I am fairly positive that we might see a small token cut, or at least a dovish stand, and if that will drive the markets. And the mood is actually a little better now, so sentiment also plays a good part in the markets. I think the traders are making money, so that's good.
Gul, how would you view rate sensitives like banks and auto in light of a possible rate cut? Now, what is also clear is that through FY13, we're not going to see, the kind of rate cuts that were originally anticipated. We're probably going to see, 75 basis points or at best 100 basis points.
Yeah, but that's enough to cheer the sentiment, because then you will start positioning yourself for 13, 14. People normally don't play. People like me, I'm talking about, the traders will play for Friday afternoon lunch decisions as well. But basically the overall situation looks a little better with US standing up, Europe settling down. And hopefully this Iran and US tirade, if it has gone down as we have seen a little bit. So if this settles off, and obviously our own government, if it starts performing as it has promised and doesn't do all this retrospective taxation business, then I think there's a huge cheer in the markets. Hopefully after this meeting yesterday with the UK Chancellor, there might have been some thought process, and hopefully the Prime Minister may intercede. This is just wishful thinking, to be honest, but if these things happen, I think the market is waiting to run away.
Good. Do you like names like a BHA? The provisional numbers have beaten street estimates and analyst forecasts as well. They've also withdrawn their DRHP for the FPO. Is it looking good to you?
See, ultimately, if we do believe that the investment cycle has to take off, you have to position yourself in these companies. They may not perform in the short term because there is a feeling that India's investment cycle has slumped. But I think somewhere along the road, we might see that picking up, and by definition, companies like BHEL or any other capital goods company, including L&T, will start performing a little better than what we anticipate. Analysts, as you know, have been largely negative on this sector, and I think personally, wherever guys are hugely negative and there's the holding of FIIs or of institutional investors is rather low, you should position yourself at least slightly to take a contra bet. I would rather say it an independent bet, but you can call it a contra bet. I would say these are stocks which will perform over the next 2 years. As you see rate cuts, obviously people will start planning for their growth stories again. We haven't seen much of that in the last 4 years. We will see that going forward. And you see, if you follow the news on your own papers, they have recently said that the PSUs will invest roughly about 1,75,000 crores over this year. That's a good thing. So ultimately they will come to the likes of L&T and BHEL for most of the things. And power is major thing, because ultimately you won't get manufacturing, going to stratospheric levels as we had seen earlier in 2006, 7, 8, unless you have your power in place. So I'm quite reasonably optimistic. I won't say that I'm very, very positive, but I would say that if you have a hold in it, I think you should continue to do that. But if you haven't bought it, you might want to nibble away a little bit slowly, but not aggressively.
Gul, what about the IT pack? What are you watching out for from the big boys like TCS and Infy ahead of the earnings season? Obviously, a weak rupee is going to come handy.
Yeah, that definitely will. But, you necessarily don't only play for the currency. These are better businesses. But this year, as each one of them has already mentioned, they are unlikely to perform. So they will get into the kind of a situation where people will not add on to them, but people may not even offload. In my case, I'm not kind of changing the track. I'm continue to hold all the top 3 or 4 companies, but I definitely won't add, because I don't see any great momentum or price discovery in a new manner coming through in the immediate, let's say in the next 3 or 4 months.